Hello, good morning students. I am Dr. M. Karukave, HOD of Commerce, Tathanada College. Today we are going to discuss about the subject Management Accounting. In this subject we have 5 units. We go through one by one. In unit 1 we are going to discuss about what is Management Accounting. Here Management accounting is the process of measuring, analyzing, reporting financial and non-financial informations of the company. It given data to the management to take any decisions for the future. At the same time, based on the information, they can achieve their goals. Here, we give us some definition. Management accounting is the process of identifying, measuring, analyzing, interpreting, and communicating account information. That means it helps the management in planning, controlling, and decisions making. Focus on future-oriented information. That is, based on the data, they can take any decision for their future activities. The main objective of the management accounting is to assist in planning and policy formulations. For here, see the first word of the object is assist, help, facilitate, improve and ensure. Step by step it given in support to the management to take any decisions. In first one, to assist in planning and policy formulation. Each and every activity to start with the planning. So in the management also, it's the main function of management is called planning. The same time in management account also they start with the planning. Okay. Then second one is help in decision making based on the past data, measuring, analyzing and confirm the data. They can take any decisions based on the previous information. The third one is facilitate control of business activities. Control means that means what I call, for example, material control. We can say that material control means how to avoid the material wastage and how to control the purchase cost. So just like that, here we can find the business activities, overall activities we can control based on the data, past data. Okay. Then fourth one is to improve efficiency and the performance. So, for example, compared with the previous year's data, the sales may increase or decrease. So, if the sales is decrease, what is the main reason for decrease? We can find the information. At the same time, suppose sales is increase, what is the main reason for increase in sales? So, based on the data, we can analyze the efficiency and performance of the company. Then another one is to ensure optimum utilization of resources. That means, for example, a resource means we can use the raw material is one of the resources, human is also one of the resources, finance is also one of the resources. So based on the resources, how to utilize perfectly for our business, at the same time how to achieve our goals in the business. Then another part is scope of management accounting. Here we have some points. It includes financial statement analysis. Then second one is cost accounting. Next one is budgetary control, standard and managerial costing, cash flow and fund flow analysis. At the same time management decision making. We can start one by one. Here the financial statement analysis comprises the comparative analysis and common size analysis and trend analysis. We can see the later. The second one is cost accounting. It controls the cost and the cost reduction. The third one is budgetary control. That means for our future transaction, we can prepare budget. For example, the company may prepare production budget for the future production level. At the same time, they can prepare sales budget, flexible budget, and then master budget for the future activity. Then another part is standard and managerial costing. Standard costing, we have a variance in analysis. In marginal costing, we can find the break-even analysis. That means in which level the company's sales or volume or units produced equal to the cost and revenue. Then another one is cash flow and fund flow. Here the fund flow and cash flow is a very broad area. We can find it in next level. Then another one is manager decision making. Based on the data, the companies make a decisions depends upon the information available in management accounting. What is the main importance of management accounting here? It helps in effective planning because the past data give us some information to the management how to execute some work in future. So based on the data, we can utilize the data for effective planning. Then second part is improve decision making ability. So based on the previous data, we can take any decisions. So the data give information about what is going on. So that based on that we can take any decision. The another part is in cost control and the cost reduction, because the cost control means how to reduce the expenses. The same time cost reductions also have some meaning. And another one is measure business performance. That means what is the performance of the business. That means the company's level of earnings compared with the previous year. We can analyze that. The next one is assist in coordination and control, because each and every activity of business coordinate with each other, we can achieve our goals. Then another one is useful for strategic management, because strategic means we have a different planning. Based on the situation, we can execute the plan. Next part is have some limitations in management accounting. The one by one is based on historical data, because the management accounting is basically information collected based on the past data, previous data. Then another part is lack of standardization, because each and every company has their own concept how to analyze the management information. Third one, depend on accuracy of accounting records. So if we can find the records based on the accountant maintain the records. So there is any false information given in management accounting data, we can get the information also very wrong. The another part is misuse due to personal bias. So sometimes the data or any information may be used by some persons. The another part is costly for small organizations, because in many big organizations maintain the records in software. They can easily get the information for the data. In small companies, they can maintain the data in system wise. At the same time, the big companies using many softwares for collecting information through the accounting softwares. But in small companies, they can do it. Another part is required a skilled person, because management accounting is based on that past data. We can take any decision to collect information. So they need some skilled persons to get the information. Okay. So without the knowledge of persons, the information, we can't get some exact information. The next part is what is the difference between the management accounting and the cost accounting. The basics of the difference is, first one is objectives, second one is scope, third one is focus, and then fourth one is nature. Based on the objectives, management accounting based on the decision making concept, the same time cost accounting based on the cost control, that means how to reduce the expenses or cost. Then second one is based on the scope, the management have a wide area to analyze the data. In cost accounting, very limited, because based on some elements of cost, it very limited to the management to analyze it. The third part is focus. In management accounting, the data are based on the planning and the control of the next, that means future activities. But in cost accounting, based on it's only the cost ascertainment of the product. The last one is nature of the management accounting based on the forward looking, that means for future transactions. At the same time, cost accounting is an historical, that means past existing data will be recorded. At the same time, another comparison, management accounting and financial accounting. Okay, here there are some basis of difference. User, time focus, rules and reports. Here management accounting is the internal part. That means the data is only used within the company. At the same time, in financial accounting, the data is used by the stakeholders, creditors, and the other external persons. Because in management accounting, the managers and the topmost management people expect the information. The outside is not necessary. Data expected. At the same time, in financial accounting, the stakeholders and the creditors expect the company's data. That means what is their financial status, what is the profit, what is the company's status in as asset and liabilities. Okay. Then second basis is time focus. In management accounting, they are based on the future. That means we already said the management accounting only used for decision making for the future. At the same time, financial accounting is past records, and that means based on the company's transactions, the record of financial transactions. That means come under the trading profit and loss account and the balance sheet. The other part is rules. In management accounting, there is strict rules followed. The same time, financial accounting, they have to follow the golden rules. Based on that, we can convert the information into the journal. That means we have to find which one is debit aspect, which one is credit aspect. Then the next level is ledger preparation. Based on that, we can we can prepare trial balance. Based on the trial balance, we can prepare financial account. That means trading profit and loss account balances. So the financial accounting must follow some standards. The next part is report. That means in management accounting, we can flexibly prepare the report. At the same time, the financial accounting have a fixed format. At the same time, the IFRS format also will be followed. Right. In Unit 1, we have some data. That means financial statement analysis part. Okay. Here we have some information regarding how to analyze the financial statements. Here have some definitions. Financial statement analysis is largely a study of a relationship among the various financial factors in a business as disclosed by the single set of statements, and a study of trends of these factors are shown in a series of steps. That means based on the previous financial statements, that means previous balance sheet or previous profit and loss account, we can analyze the data. So that is come under the financial statement analysis. We have some analysis here. First part is basis of the financial statement analysis, need for a comparative analysis and a common sense analysis. Here we have some horizontal and vertical analysis. In horizontal vertical analysis, balance sheet, income statement will be analyzed. In ratio analysis, we have different ratios to analyze the data. At the same time, we have another part is earning power and irregular items and the quality of earnings also. The part is introduction to the comparative and the common sense analysis. Here, the companies analyze the data of balance sheet and a profit and loss account in two ways. That means one part is comparative statement and another part is common sense statement. In comparative statements, the companies compare the 2 years data. It may be a balance sheet or it may be a profit and loss account of the companies. At the same time, in common sense statement, the companies compare, that means analyze the data based on the company's total value. That means come under the what are the fixed asset value. Then out of that percentage, how much percentage take the fixed assets, how much percentage take the current assets also. These are some format for the comparative balance sheet. We can see that here. In left side, they give us some particulars about the liabilities and the assets of the companies. Here we can see the 2 years balance sheet. Then third column I have an absolute change. Then fourth one is percentage change. Here based on the 2 years data, we can separately give a data about the liabilities and then another part is assets. Here in 2 years data. In third column, what is the increase or decrease? That means we can come under the absolute change that is given in the amount format. At the same time, in third column, we can give it in percentage also. The same time, you have an asset side also. They have a 2 years data. Compare with that data, what is amount increase or decrease, absolute change column. At the same time, the fourth column we can give it in percentage format. Okay, we can get in continue our class in next class.